You are currently trading the best years of your life for a handful of digital pixels. Every morning at 6 a.m., your alarm blares an abrasive alert that rips you out of sleep. You stagger to the kitchen, chug an oversized cup of bitter corporate break room coffee, and stare at a glowing monitor. By 9 p.m., you are still sitting in the same ergonomic chair, rubbing your bloodshot eyes, waiting for a late-night delivery driver to drop off a lukewarm paper bag of food on your doorstep. Your phone lights up with a stream of notifications from Slack, Microsoft Teams, and unanswered emails. You tell yourself that you are building a future, but your bank account tells a completely different story. The middle-class dream is a carefully engineered financial trap, and you are running on the treadmill voluntarily. The human brain is a biological machine governed by primitive chemical algorithms. It was designed to hunt for scarce calories on the African savanna, not to navigate complex financial markets or resist the sophisticated attention capture systems of modern Silicon Valley. When you try to save money by scrolling through coupon apps for 2 hours to save $40 on groceries, your brain experiences a false sense of accomplishment. It releases a small spike of dopamine that tricks you into feeling productive. In reality, you just valued your limited, irreplaceable cognitive bandwidth at $20 an hour. You are treating your life energy like cheap, disposable scrap metal, while wonder why you remain trapped in the same tax bracket year after year. Our culture treats wealth as an inheritance or a stroke of blind luck, but it is actually a predictable game of structural leverage. Most people fail because they try to climb a 1,000-step ladder before they even master the first 10 steps. They read abstract philosophy books, write down grand manifestations in journals, and then spend their weekend scrolling through social media trying to copy 17 different side hustles simultaneously. This creates a state of severe psychological paralysis. When you try to build an automated software tool, launch an e-commerce brand, write an email newsletter, and apply for corporate promotions all in the same fiscal quarter, you ensure absolute failure across every single domain. You are trying to boil the entire ocean with a single matchstick. Consider the reality of the American W-2 tax structure. The entire system is legally engineered to extract maximum value from salaried labor while providing massive codified structural incentives to business entities and asset owners. When you receive a standard paycheck, your largest expense is deducted before the capital ever hits your checking account. You are paying for the infrastructure of the state up front, while the corporate entities you work for deduct their expenses first and pay taxes only on the remainder. To break out of this cycle, you must stop viewing money as a medium of exchange and start viewing it as a physical store of life energy. Every $100 in your wallet represents a specific chunk of your mortality that you can never buy back. The first fundamental law of wealth generation is extreme, almost psychotic concentration. The modern narrative of instant diversification is a corporate myth designed to keep average retail investors stable, predictable, and fundamentally uncompetitive. Diversification is a defensive mechanism used to preserve existing capital. It is not a tool used to build an initial engine of wealth. Every notable economic empire in modern history was built on the absolute obsession with a single variable. A tech giant does not start by launching an entire ecosystem. They spend years perfecting a single digital storefront that sells physical books. A social media network does not target the global population on day one. It dominates a single university campus before expanding its perimeter. When you expand your focus too early, you dilute your limited operational energy down to zero. Imagine an early-stage entrepreneur who finally stabilizes a single software product or a local consulting service. Instead of scaling that system to its natural market capacity, they immediately experience shiny object syndrome and attempt to launch 3 new brands. They split their attention, double their operational overhead, and destroy the fragile momentum of their primary income stream.
True growth requires you to obsess over one specific customer group, one scalable distribution channel, or one high-ticket digital asset until it clears its first $1 million in net volume. Only when the engine is entirely self-sustaining are you permitted to diversify your assets. The secondary trap is the false dichotomy of modern frugality. Standard personal finance experts love to lecture the working class about their daily habits. They tell you to cut out your morning espresso, skip the office lunch, and cancel your video streaming subscriptions so you can compound a few extra pennies over the next 4 decades. This is a form of cognitive starvation that kills your psychological momentum. Frugality has a natural mathematical floor. You can only cut your expenses down to 0 before you starve to death. Increasing your income, however, has an infinite ceiling. Instead of spending your valuable mental energy calculating how to shave $12 off your weekly utility bill, you should use that exact cognitive power to expand your baseline earning capacity. The masses are obsessed with looking wealthy rather than being wealthy. They buy depreciating status symbols on monthly installation plans, using tomorrow's unearned income to buy today's shallow validation from strangers. When you see a brand new luxury vehicle in a suburban driveway, you are not looking at historical wealth. You are looking at a highly leveraged liability that requires 48 months of mandatory labor to service. True wealth is the invisible capital that remains unspent. It is the liquidity in your brokerage account that gives you the absolute power to walk away from a toxic corporate environment without asking for permission. It is the ability to sleep through a restructuring meeting because your survival is completely decoupled from a corporate director's approval. To achieve this level of structural immunity, you must understand the concept of zero marginal cost replication. If your income is strictly tied to the hours you log on a timesheet, you are operating at a permanent structural disadvantage. You have a hard physical limit of 24 hours in a day, a significant portion of which must be spent sleeping to maintain basic biological functions. True scale requires you to construct or acquire assets that can be duplicated millions of times without requiring additional physical labor or capital investment. A piece of software code written once can be downloaded by 500,000 users across the globe while the developer is asleep. A highly optimized digital content asset can educate a global audience simultaneously without requiring a live presenter.
Most people treat their career like a lottery system, hoping that if they work hard enough, some external authority figure will notice their effort and hand them a massive promotion. This is a dangerous miscalculation of corporate incentives. A company is a cold, rational economic engine designed to maximize output while minimizing operational expenses. If you're an exceptionally efficient worker who holds a critical mid-level position together, the company has a strong financial incentive to keep you exactly where you are. Promoting you creates a dangerous operational vacancy that they have to fill at a higher market rate. You do not get rewarded for your blind loyalty. You get rewarded for your structural scarcity. You must systematically transform yourself into an irreplaceable economic asset. Think of a specialist deep-sea diver who possesses the rare physiological capability to operate under extreme atmospheric pressure. When a commercial infrastructure project breaks down miles beneath the ocean surface, the operators do not host a long hiring committee or look for the cheapest option. They call the single specialist who can solve the catastrophic problem immediately, and they pay whatever rate that specialist demands. They are not paying for the diver's hours. They are paying for the decades of concentrated focus that made that specific hour possible. If you want high-tier compensation, you must develop a unique combination of high-value skills that cannot be easily automated or outsourced to a lower-cost labor market. The primary obstacle to this transformation is a lack of clear psychological clarity. Most people have no concrete definition of what they are actually trying to build. If you ask the average corporate employee what their financial objective is, they will give you a vague, unquantifiable answer like wanting more money or wishing to retire early.
This lack of precision leads to random, erratic behavior. It is the equivalent of walking up to a crowded deli counter and asking the clerk to give you a random sandwich. You will receive whatever leftover ingredients they need to clear out of the kitchen, and you will pay full price for something you don't even enjoy. You must write down your specific financial targets with absolute mathematical precision. You need to know exactly how much capital your life engine requires to operate at peak efficiency. Calculate your exact baseline survival number, your target comfort number, and your ultimate wealth-building number. Once you have these figures clearly mapped out on a digital document or a physical whiteboard, you can reverse engineer the precise systems required to produce that specific cash flow. Every single action you take must either directly service the optimization of your fixed costs or fuel the expansion of your wealth-building assets. If an activity does not align with those dual objectives, it must be ruthlessly eliminated from your calendar without a second thought. We must also dismantle the cultural myth of the self-made individual who relies entirely on raw willpower. Willpower is a limited biological resource that drains throughout the day, much like a smartphone battery running complex background apps. If you rely on your conscious discipline to resist the constant temptation of consumer spending or digital distraction, you will eventually fail when your energy hits zero at the end of a long day. The elite do not rely on willpower. They build automated guardrails that make failure mathematical or social painful. They set up direct payroll deductions that pull capital out of their sight before they ever have the chance to spend it, or they use financial commitment platforms to put hundreds of dollars of skin in the game on their personal goals. If you tell yourself that you will invest whatever money is left over at the end of the month, you are setting yourself up for failure. The modern consumer ecosystem is specifically designed to sweep your accounts clean using highly optimized algorithms. Retail apps track your browsing behavior, delivery services offer frictionless one-click ordering when you're tired, and subscription models quietly extract small fees from your accounts every 30 days. To beat this system, you have to pay yourself first. The absolute moment capital enters your ecosystem, a non-negotiable percentage must be instantly diverted into your wealth engine through automated rules. You must force your lifestyle to adapt to the remainder rather than hoping your habits will naturally leave a surplus. This requires a complete restructuring of your mental accounting systems. The human mind naturally categorizes capital based on its source rather than its intrinsic value. If you work a difficult 40-hour week to earn a specific salary, you treat those dollars with extreme caution. But if you receive an unexpected tax refund or a quarterly corporate bonus, your brain treats that capital as play money. You immediately begin looking for a premium consumer upgrade, like a new phone or a luxury vacation, completely ignoring the fact that those dollars possess the exact same purchasing power as the money you earned through sweat and long hours. To build real wealth, you must treat every dollar with the same strict logic, regardless of how it entered your system. Let us explore the mathematics of early capital accumulation. There is a profound difference between the concept of saving and the mechanics of compounding investment returns. In the initial phases of wealth accumulation, your absolute savings rate is exponentially more critical than your market return rate. If you have a total portfolio value of $10,000, an exceptional market return of 10% will yield you $1,000 over the course of an entire year. That same amount can often be generated in a single month by tightening your discretionary spending or executing a short freelance project. Do not waste hundreds of hours analyzing volatile market charts when your primary bottleneck is simply a lack of raw capital to deploy. Your primary focus during the early stages must be the rapid expansion of your baseline savings volume. This is where the concept of leverage becomes real. Leverage is not just borrowing money from a financial institution to purchase a property. It's the strategic amplification of your input through structured systems. There are three primary forms of modern leverage: labor, capital, and products with zero marginal cost of replication. Labor is the oldest form, requiring you to manage human beings. It is highly complex, fraught with interpersonal friction, and difficult to scale without significant organizational overhead. Capital leverage is highly efficient, but it requires you to already possess a massive surplus of money to see meaningful results. The third category, products with zero marginal cost of replication, is the ultimate playground for the modern solopreneur. This category includes software code, digital media, written assets, and automated systems. You build the asset once using your raw intellectual power and basic digital tools, and the distribution algorithms can replicate it infinitely at a cost that rounds down to zero. A single automated system can process thousands of client transactions, deliver digital goods, and update financial ledgers simultaneously while you are completely disconnected from the network. This is the only mechanism that allows an isolated individual to compete with traditional corporate structures without hiring a massive workforce. To effectively deploy this leverage, you must maintain a day job that covers your fixed survival costs while quietly building your asset column on the side. This is what it truly means to mind your own business. Your day job belongs to your employer, but your asset column belongs entirely to you. Many aspiring entrepreneurs make the fatal mistake of abruptly quitting their primary source of income to chase an unproven business concept. This instantly introduces an extreme amount of survival stress into their lives. When you are worried about how you will pay your rent or cover your baseline health insurance next month, you cannot make rational, long-term strategic decisions. You start taking low-value projects just to survive, effectively turning your new business into another low-paying job. By keeping your W-2 employment stable, you effectively use your corporate salary to fund your personal research and development department. You use their office infrastructure, their steady paycheck, and their health insurance plans to underwrite your personal economic experiments. You wake up early to write your code or create your assets before your official login time, and you use your evenings to optimize your distribution networks. This requires a high level of mental discipline, but it completely removes the existential risk of entrepreneurship. You only transition full-time into your own enterprise when the automated cash flow from your personal asset column consistently outpaces your corporate salary for multiple consecutive quarters.
This strategy requires you to understand the stark difference between a real asset and a consumer liability disguised as an investment. An asset is a structure that consistently puts liquid capital into your pocket on a recurring basis without requiring your active physical presence. A liability is a structure that continuously extracts capital from your pocket to maintain its existence. The average middle-class consumer fills their life with complex liabilities under the delusion that they are building a portfolio. They buy an oversized primary residence with a 30-year mortgage, expensive homeowners association fees, property taxes, and ongoing maintenance costs, and they call it their greatest financial asset. In reality, that property is a massive drain on their monthly liquidity that forces them to remain chained to their corporate desk. Real wealth creation requires you to be completely indifferent to the visual opinions of the crowd. The individuals who are truly building massive financial optionality are rarely the ones wearing flashy logos or driving exotic cars through heavy city traffic. They are the quiet operators who live in modest neighborhoods, wear functional clothing, and maximize their investments behind a screen. They understand that spending $1 million to show everyone how much money they have is the absolute fastest way to no longer have $1 million. They value their personal sovereignty far more than the temporary admiration of people they do not even respect. Let us look closely at the mechanics of the debt snowball, which is one of the most effective psychological frameworks for clearing consumer obligations. If you are carrying high-interest credit card debt, student loans, or predatory auto financing, you are operating with a severe leak in your financial hull. Every dollar you pay in interest is a soldier that was captured by the enemy and turned against your own army.
To systematically eliminate this vulnerability, you must ignore traditional mathematical optimization and focus entirely on human behavioral psychology. List every single one of your debts from the absolute smallest remaining balance to the largest, completely ignoring the interest rates for a moment. You then automate the absolute minimum required payment on every single account on the list, except for the smallest one at the top. Every scrap of your discretionary capital, every dollar saved by skipping luxury items, and every bit of side income must be ruthlessly directed toward that smallest balance until it hits zero. When that first account is completely closed, your brain experiences a powerful psychological win. You have proven to your biological reward center that your system works. You then take the entire payment capacity that was previously servicing that small debt and roll it directly into the next smallest balance on the list. This creates an unstoppable financial momentum that accelerates as each structural vulnerability is eliminated from your ledger. This continuous process requires you to accept that failure is a standard feature of the wealth-building algorithm, not a bug. Most people try to launch a single side project or apply for one specialized role, encounter an immediate rejection or a technical breakdown, and instantly give up under the assumption that they are simply not cut out for the business world. This is the equivalent of going to a fitness center, completing a single workout, and quitting because you do not see an immediate physical transformation in the mirror. Success is a game of continuous iteration. If your initial product launch fails to generate traction, you do not abandon the entire entrepreneurial path. You analyze the customer conversion data, refine your messaging, fix the friction points in your user experience, and launch again with a superior asset. You must view your life through the lens of a clinical scientist conducting a series of ongoing experiments. If an experiment fails to yield the hypothesized result, the scientist does not sink into an emotional depression or throw away their laboratory equipment. They simply log the data point, adjust the variables, and initiate the next test sequence. The only way to lose permanently is to completely stop running the tests. The more high-quality actions you take, the higher the mathematical probability that you will eventually align your value with a major market demand. You are actively engineering your own luck through the sheer volume of your strategic execution. To maintain this high level of execution over a long timeline, you must structure your daily life around systems rather than erratic emotional states. Motivation is a highly unreliable chemical luxury that disappears the moment you are tired, stressed, or facing a difficult creative block. If you only work on your assets when you feel inspired, you will lose to the automated systems of your competitors every single time. You must build a highly predictable, repeatable environment that forces you into deep focus by default. Set up a dedicated workspace that is completely free of digital or physical distractions. Block out identical hours on your calendar every single week and treat those hours as sacred commitments that cannot be compromised for casual social invitations. Consider how the elite handle their financial fees and advisor relationships. The average retail consumer trusts their retirement capital to traditional financial planners who wrap basic index funds in beautiful gloss brochures and charge a seemingly small 1 or 2% management fee. This looks insignificant on a monthly statement, but over a 30-year investment horizon, that single percentage point difference will ruthlessly devour hundreds of thousands of dollars of your potential net worth. The financial advisor is an employee of an institution designed to maximize its own profit margins, not yours. They are legally and structurally incentivized to steer your capital toward complex investment products that generate high commissions for their firm, regardless of whether those products outperform the broader market. You must take absolute radical ownership of your own financial architecture, instead of outsourcing it to a third party. This radical ownership extends directly to how you present your personal brand to the economic marketplace. Whether you like it or not, the world continuously judges you based on your external packaging and communication clarity. If you present yourself as a disorganized, generic generalist who is willing to take any low-value task just to secure a quick payment, the market will price you accordingly. You will be forced to compete for price against millions of other desperate generalists in a race to the bottom. But if you position yourself as an elite specialist who solves a highly specific corporate problem with data-backed precision, you instantly shift the dynamic of the negotiation. You are no longer begging for a job. You are offering a high-tier solution that the counterparty desperately needs to preserve their own revenue. Think about how modern consumer platforms package identical products at wildly different price points to exploit human psychology. A bulk crate of unwashed fruit might sell for pennies at a local wholesale terminal, but that exact same produce, washed, sliced, and packaged in a sleek container at a high-end grocery store in a premium district, will command 1,000% markup. The core physical material is identical, but the context, convenience, and presentation allow the retailer to capture an immense premium. You must apply this exact same packaging principle to your professional career or your digital business. Clean up your public digital footprint, refine your professional messaging, speak with absolute data-backed authority, and refuse to lower your baseline rates for clients who do not value your specialized skill set.
This brings us to the core concept of the conscious spending architecture. True financial sovereignty does not mean living an austere lifestyle of permanent self-denial. It means ruthlessly cutting expenses on the items and services that bring zero long-term utility to your life, while spending uncomfortably large amounts on the specific elements that actively fuel your productivity, health, and operational velocity. If subscribing to a premium productivity software platform or renting a quiet, distraction-free co-working space allows you to complete deep creative work in half the time of your competitors, that expense is not a luxury. It is a vital piece of industrial machinery for your wealth engine. You must build a highly customized personal budget that reflects these strategic priorities. Automate your financial inflows so that 50% is instantly allocated to your fixed living costs, 20 to 30% is immediately swept into your high-growth investment engines, and the remaining balance is placed into a dedicated discretionary account. This allows you to spend that remaining capital with absolute freedom and zero psychological guilt. If you want to use that specific pool of money to order premium delivery services during an intense building phase so you can save 90 minutes of cooking and cleanup time, you can do so with complete confidence because your long-term wealth engine has already been fully funded automatically at the start of the week. We must also critically examine the classic concept of retirement. The traditional narrative tells you to spend 40 years working at a job you do not enjoy, saving a tiny percentage of your income in a tax-sheltered account so that you can finally stop working at age 65 when your body is tired and your primary biological energy has been completely depleted. This is a bad deal. True retirement is not a specific age or a massive pile of static cash in a bank account. It is the absolute alignment of your daily labor with your personal curiosity. You are truly retired when the work you do feels like play to you, but looks like high-value labor to the outside marketplace. Think of an elite software engineer or a specialized digital writer who is completely obsessed with solving complex algorithmic puzzles or crafting compelling narrative systems. They will spend 10 hours straight staring at a screen, completely lost in a state of deep cognitive flow, ignoring food and sleep because the act of creation is intrinsically rewarding to their biological system. When they publish that work, the market rewards them with high-tier financial compensation because the asset they created solves a major business problem. They are getting paid massive amounts to play with their favorite intellectual toys. That is the ultimate financial state. They do not want to retire from their work because their work is the very thing that gives them deep psychological fulfillment. To build this reality, you must start acting like the version of yourself that already commands high market value. This is not about hollow positive thinking or buying luxury clothing you cannot afford to fake a lifestyle. It is a fundamental shift in your behavioral choices and information inputs.
If you want to build a $10,000 a month asset engine, you must stop consuming the shallow dopamine-addicting entertainment that the bottom 90% of the population uses to numb their minds after a corporate shift. You must start reading complex technical documentation, studying highly successful business architectures, and analyzing data pipelines. You must change your information diet to change your mental processing capacity. Your mind is a biological computer that can only output high-value solutions if you feed it high-quality data. If you fill your brain with sensationalized news clips, viral social media drama, and mindless entertainment feeds every evening, you cannot expect your subconscious mind to magically generate million-dollar asset concepts while you sleep. You are feeding the machine toxic garbage and wondering why the engine is constantly coughing up smoke. Ruthlessly clean up your digital environment. Unfollow every account that does not add deep strategic value to your long-term goals. Block distracting domains on your devices during your deep work windows, and protect your limited cognitive attention as if your absolute freedom depends on it, because it does. Let us explore the core mechanic of the rule of wealth preservation across major economic cycles. Once you have successfully concentrated your energy and built an initial pool of capital through a highly focused asset engine, your primary objective shifts from rapid generation to bulletproof preservation. History is littered with brilliant, aggressive operators who generated millions of dollars during an economic boom, only to lose every single dollar during the subsequent market correction because they failed to understand structural stability. They allowed their egos to convince them that their past success was entirely due to their personal genius, rather than a temporary wave of market liquidity. To protect your hard-earned capital across generations, you must allocate it across distinct asset classes that react differently to economic shocks. The classic elite strategy involves splitting your wealth into three distinct pillars: real estate that provides essential human utility, highly liquid gold or sovereign assets that act as a permanent hedge against currency inflation, and diversified high-growth equity engines that capture broader economic expansion. While speculative assets and trendy digital tokens can provide rapid short-term capital efficiency during a speculative bull run, they are inherently fragile and can evaporate overnight when institutional liquidity retracts. You must anchor your long-term security in tangible physical realities that the human population will always require to survive and operate. You must also develop a profound understanding of the law of scale. The velocity of your wealth generation is directly proportional to the magnitude of the economic problem you choose to solve for the marketplace. If your business model only solves a minor inconvenience for a handful of local businesses, your financial upside will always be strictly capped by your immediate geographic perimeter. But if you construct a highly scalable software integration or a digital distribution platform that optimizes the workflow for hundreds of thousands of independent solopreneurs across the nation, the market will naturally reward you with a massive fortune. The market is a cold, indifferent calculator that does not care about your personal effort, your intentions, or your background. It only cares about the scalable utility of your solutions. Stop asking how you can make $1 million for yourself and start asking how you can inject a massive amount of efficiency into a highly fragmented market segment. Look for industries that are stuck using legacy systems, teams that are drowning in manual data entry, or professional demographics that are completely underserved by modern software tools. When you build a clean, frictionless asset that eliminates that specific pain point, the capital will flow into your ecosystem automatically as a natural byproduct of the economic value you have engineered. You become a structural conduit through which efficiency is delivered to the market, and you naturally retain a premium percentage of that newly created margin.
This requires you to abandon the comfort of the herd. The vast majority of human beings are structurally wired to seek safety in consensus. They do what their peers are doing, say what their peers are saying, and follow the exact same lifestyle blueprints that their cultural environment dictates. They go to the same universities, apply for the same corporate entry roles, buy the same suburban houses, and consume the exact same mass-market media. This collective mimicry creates an intensely crowded marketplace where everyone is competing for the exact same scraps of mid-tier economic real estate.
If you want results that the bottom 99% of the population will never achieve, you must be willing to make strategic choices that the average person views as completely irrational. It means being comfortable with being completely misunderstood by your immediate social circle for years at a time. When you refuse to go out for expensive weekend drinks because you are waking up at 5 a.m. to audit your data pipelines, your peers will label you as obsessive or antisocial. When you invest your entire corporate bonus into building a scalable software prototype rather than leasing a luxury vehicle, your family members will caution you against taking unnecessary financial risks. You must develop an absolute internal immunity to this social friction. The crowd is not checking your balance sheets, funding your retirement accounts, or paying your fixed costs. Their opinions are completely non-binding economic noise that must be filtered out of your decision engine. Let us break down the exact step-by-step systemic protocol to transition your life from a dependent W-2 corporate laborer to a sovereign, asset-backed operator. Do not execute this sequence as a series of haphazard emotional choices. Treat it as an industrial deployment plan. Your initial move is the immediate optimization of your structural runway. You must construct a rock-solid financial fortress that protects your personal ecosystem from any immediate market disruption. This means accumulating a dedicated emergency cushion that covers at least 6 months of your absolute fixed survival expenses. This capital must not be mixed with your speculative investment accounts or your discretionary spending card. It must sit in a highly secure, high-yield cash account that you do not touch under any circumstances short of an absolute systemic emergency. Once your structural runway is fully locked down, you immediately enter the phase of rapid skill stacking concentration. Identify your core professional competency and find the high-value secondary skill that exponentially multiplies its leverage. If you are an engineer, do not just learn another coding language. Master the psychology of conversion rate copywriting so you can pitch your tools directly to corporate executives. If you are a designer, do not just learn another vector tool. Master data analytics so you can prove your visual interfaces directly increase business revenue. This combination of distinct skills shifts you out of the replaceable labor pool and transforms you into an elite economic anomaly that can command premium market equity. With your specialized skill stack fully developed, you begin the systematic construction of your primary zero-marginal-cost digital asset. This building must occur entirely during your non-working hours, completely isolated from your corporate employer's infrastructure. Spend your weekends engineering a reusable software framework, compiling a highly specialized database, or packaging your industry workflow solutions into an automated template ecosystem. You distribute this asset across digital networks using scalable automation to handle client onboarding, delivery, and payment processing. Your financial input remains fixed at zero, while your potential upside begins to scale exponentially with every digital node that connects to your infrastructure. As your digital asset begins to generate initial transaction volume, you must resist the immediate urge to inflate your consumer lifestyle. Do not buy a single luxury item, do not upgrade your apartment, and do not change your daily spending habits. Every single dollar of net margin generated by your personal asset engine must be captured and instantly routed back into your wealth engine. Use that capital to automate your digital infrastructure, hire specialized virtual assistants to handle your baseline customer support pipelines, or acquire low-risk cash-flowing equity to fortify your baseline economic security. You are systematically building a self-reinforcing financial machine that grows more powerful with every transaction cycle. Finally, when the monthly automated cash flow from your personal asset infrastructure consistently prints more liquid capital than your corporate W-2 salary for 6 consecutive months, you are permitted to execute the sovereign exit protocol. You walk into your corporate office, log out of their network for the last time, and hand over your credentials with absolute professionalism and zero emotional drama. You are not leaving in a fit of angry frustration. You are leaving because your personal industrial engine has officially outgrown their corporate framework. You are now a fully sovereign agent operating inside a free market economy, backed by an immutable column of digital assets that work for you every second of the day. The game of financial freedom is not about luck, inheritance, or raw willpower. It is a game of strategic positioning, biological algorithm manipulation, and the ruthless deployment of scalable leverage. You can continue running on the middle-class corporate treadmill until your energy is completely spent, or you can start building your personal asset engine tonight. Look at the glowing monitor in front of you, look at the notifications piling up in your inbox, and ask yourself if you are truly willing to trade the rest of your life energy for a handful of temporary digital pixels. The choice is yours, and the clock is ticking. Shut down the distractions, clear your calendar, and begin building your fortress right now.